Hello everybody. So 3 separate topics I want to talk about today. MSTR being back, topic number 1. Then I'm going to talk about BioStem, and the stock is up more than 30% right now. And then I'm going to talk about 3 stocks that I find good deals, that I find to be good deals at the moment. So let us begin with Bitcoin. Bitcoin's back, MicroStrategy's back. Yesterday's drop was indeed technical, and MicroStrategy broke back the $300 level in after hours. The one thing that I wanted to discuss briefly is the volatility of MicroStrategy. I've been loving this volatility more and more. I mean, I've always loved volatility because, tech stocks, growth stocks, Bitcoin, that's really what I do on this channel. But to be fair, Bitcoin, when it comes to volatility, has been very disappointing. That's why I've called it a stable coin. I've called it normal. I've called it even boring. Anyways, it used to be much more exciting. Bitcoin used to oscillate much faster. It used to move up and down and up and down and up and down much faster. And those ETFs, I don't know if the options markets on those ETFs are that great. But you know what's better than Bitcoin? You know what's more volatile than Bitcoin? Well, it's MicroStrategy. So if you look, I took this troubled month. We've had a crazy month, right? With the trade madness and the news cycle has been crazy. The fear, the FUD. Anyways, the markets have been crazy. You can see through this craziness, Bitcoin only had a 11% difference between the peak for a past month, and the bottom from a past month. So peak to trough, Bitcoin only had 11% difference between the top and the bottom. Now, look, and that's the volatility, right? So that's why I call it yawn-inducing. We started in the 80s, and we're still in the 80s. So Bitcoin is 80,000. What can I say? It's 80 grand. That's what Bitcoin is. So like 82 plus or minus 2. Anyways, if you look at MicroStrategy, though, much better. MicroStrategy 30%. Look at the volatility. 30% of MicroStrategy between the peak and the bottom. And notice how they pretty closely match, right? And one of them has to do with the weekend. Sometimes they don't match exactly, but they pretty closely match. So MicroStrategy is indeed, as far as I'm concerned, almost 3 times more volatile than Bitcoin. And of course, just for laughs, I put MSTX in there just for laugh. And you can see on the same chart, MSTX is down 54%. So it's at a 54% difference on the exact same chart. So that is the most volatile. And I hope these 3 charts really make the sailor analogy of the refinery, the volatility refinery. I hope it really makes it come to life. I didn't put the strike preferred chart, but the strike preferred chart would be less volatility than Bitcoin. Then you have Bitcoin, which is just the normal volatility of money, which, compared to the rest of the market and compared to companies is, could be construed as boring. Then we have MSTR. MSTR is the high octane fuel. It's your premium gas that you have to put in, was it the Mercedes or the BMW? It's that expensive gas. And then you have MSTX. And MSTX is Sunoco's 260 racing fuel. I did some research on racing fuel. Apparently, that's the highest octane racing fuel you can get. You don't want to ever throw that on a barbecue or anything because it will blow up. And of course, if you use MSTX, it's akin to using Sunoco 260. And you probably don't want to use that if you don't have a car that's equipped to handle Sunoco 260, of which very few cars are. But the high octane fuel, also you want to be careful. BTC is just the regular gas. That's the analogy, and I hope this helps it come alive. Okay, moving on to stock number 2. Stock number 2 is placentas. I told you placentas were great. No financial advice, no placenta advice. By the way, if you have a child, make sure you freeze the placenta. That placenta is way too valuable. It's filled with stem cells that are just way too valuable to be donated. We're slowly figuring out that stem cells are extremely valuable. BioStem is figuring it out for wound care. Is figuring out the benefit of placentas for wound care, because I do believe they have a superior product with their allografts. But like the stem cells, placentas are important. And if you have a child, for example, and you freeze their placenta, it could save tons of money in the future because stem cells still need to be compatible. And if you happen to have your own placenta frozen, the compatibility within the family is very, very high. So that's just the no placenta advice part of the video. Let's talk about BioStem. BioStem, so So turns placentas into bandages. Sorry, I have no better way to say it. The great news of today was, if you follow the channel, I've discussed it before, the stock was under pressure because the LCD had not come out, and the LCD is what? It's the local coverage determination, and they pretty much have the right of life or death on companies that sell medical products. It's very sad that it's not innovation who has to speak for itself. It is bureaucrats who decide whether they include it or whether they don't include it. And fortunately for BioStem, these bureaucrats are very slow. They've delayed it once, the LCD, for this year, and they just delayed it again. So now the delay is until 2026, which means that they are still going to get reimbursements for two of their products that were threatened by not being on the LCD potentially, right? What that means is that they're going to keep getting the reimbursement until the end of 2025. So what that means, because it's postponed until January 1st, 26, right? So what that means is that 2025 will be a year of cash generation for BioStem, of big time cash generation. That's what I believe. Additionally, the call is coming on April 14, and now I really look forward to that. We'll learn much more about the LCD and the issues. That's why the stock had been battered quite a bit. Now, for BioStem, you may know that I never really cared about those risks. Why didn't I ever care about those risks? Because of the valuation. This is the cheapest stock I have ever seen in my entire life in the history of my valuation. It is still, despite the 39 even, despite the 39% rise today, this stock is still trading under a 0.01. So it's still 8 times cheaper than HIMSS, right? 4 times cheaper than LifeMD. So I was like, okay, this stock is so cheap. I have no issue with, you can throw a lot of risk at me, and I'm still gonna like this stock because it is so cheap. Market cap 2 days ago when I covered it and I said it didn't participate in the bounce, the market cap was 120 million. So now the market cap is back to 210 million, and the trailing 12-month revenue, to give you an idea, was 302 million, and they're predicted to grow that by 80% through the year of 2025. So think about that. That's going to be a company that has 500 million in revenue probably in 25, and the market cap is 210 million, and the gross margin is 97% because the cost of goods sold of placenta is near zero because they're donated, and they're already EBITDA margin profitable. So it's I find this company quite stunning. I'm very, very interested in it. I'm so glad I was adding just under 8. I got to add to it. I am so glad. And don't forget, this position also has a catalyst of being listed potentially on the NASDAQ and not being a pink sheet anymore. And a lot of people don't look at this stock because you got to have a legacy broker to access it, right? I mean, it's not on Robinhood. It's not on modern day brokers with great UX. You have to go for a broker that has an awful UX to get it, and you have to pay a fee. But as soon as they can get listed on the NASDAQ, that's going to change, and I guess this stock will have more attention. I think this is a stock that's not getting enough credit for being innovative, and especially for being cheap. It is very, very cheap, and it is getting no credit for that. Anyways, the last stocks I want to talk about briefly, 3 stocks, and I own all 3 of these, and I find them to be stunning deals right now. The first stock, of course, is Hims and Hers. I talk about Hims and Hers right now, it seems, every other day because the stock keeps dropping. Yeah, I know some of you in the comment section say, oh, it's going to drop to 20. Oh, look at the TA. Well, guess what? The number of stocks that I've bought when people tell me it's going to drop, and I still buy. It's like nobody knows. No, you can't know. Nobody knows. The models are broken when there are events like those we're going through right now with a trade war. No, the models don't work. They're helpful, sure, but in my view right now, this is not your standard thing where you can guess the psychology of our market participants. Anyways, I don't do TA. This is not a TA channel. It doesn't matter to me that I buy it right at the TA, but keep in mind, some people think HIMSS is going to go lower. I don't care, because to me, it's down 60% from the peak, and I don't think that stock was expensive when it was trading at 70, right? I thought it got there a little quick, but I don't think it was that expensive either on the metrics. And on the metrics, HIMSS, right, is a 0.081 on enterprise value over gross profit over revenue growth. So dirt cheap, and the rule of 40 is more than achieved at a 75. So I love HIMSS. I think HIMSS is a great company. Happy to own it. It's my third largest position. Now let's move on to two smaller positions in my portfolio, to which I've added heavily, for the way later part of that drop. I increased my positions in these recently. Anyways, stock that I want to talk about is Nebius. Of course, Nebius is a spin-off of Yandex. Yandex left Russia, but the management teams, they came to Europe, and they created Nebius in Europe. I think this stock, when I look at the metrics, it's in the data center business. It's not like a data center from a Bitcoin miner. Like Bitcoin miner data centers have limitations. For Nebius, they run data centers that have all of the levels, all of the redundancies, all of the bells and whistles. They are partnered with, for example, Nebius is partnered with NVIDIA. They got a major investment from NVIDIA. This is, so some people may say, oh, if you compare it to a Bitcoin miner, it's cheap. Well, yes, but it's also not exactly the same type of hosting that they do. Nebius does hosting that is much more suitable to having big tech clients. It's kind of a way I would summarize it. Anyways, they got a lot of orders. Right, and they got a lot of plans to grow very fast. Analysts are telling us that Nebius is going to have next 12-month revenue growth of 408%. They should be EBITDA margin profitable slightly sometimes in this year, is what they said. So that's why I put it at 0.01 here, like 1% maybe in my margin. They said they would achieve it this year. They still lose money right now, but if they achieve it this year, in my spreadsheet, I got to put a positive number, otherwise it doesn't work. Gross margin is 56%, which for a brick and mortar business, in my view, is quite high. And then, is it expensive? No, it's not. It's under 0.10. It's 0.09 still. So I find this stock quite cheap, and if you look on a relative basis, it's down 55%. I think this drop is unwarranted. AI, in my view, is not going away. Data centers are more in need than ever, and this is a stock I believe that will benefit. The last stock, I haven't covered it in a long while on this channel, and it's ELF, E-L-F, ELF Beauty, eyes, lips, face. ELF. So I did a few videos covering ELF in depth. When I covered it, like I had no idea that this was the discount brand. Like I thought this was just one of the brands like L'Oreal, etc. The point I'm trying to make is that I think for a lot of Gen Z, a lot of millennials, this brand they hold in very high regards, and this brand as an association with an early days association with Target. It was heavily sold at Target, but now it's everywhere. And if you go to a Target in the United States or even a Walmart, they now have an aisle that's very similar to the aisle of L'Oreal or Maybelline. I frankly don't see a difference. It's all very bright and shiny, and you can't stay 2 minutes in the aisle, because otherwise you get a headache because there's so many lights. Anyways, that's ELF Beauty. So to me, it is one of the mainstream brands, and it dropped 75%. At least in the US, it's one of the mainstream brands in the US, and it's dropped 75%. Yes, they make the stuff in China. Absolutely. 80%, a little less than 80% of their stuff is made in China. But it's a discount product. The average lipstick is something like $5. The average, I don't know how you call it, like eyeliner, is it? It's like $3. They have three main categories of product. One of them is $5, one of them is $8, one of them is $3. Okay, China is devaluing the currency. There's going to be a lot of supplier concessions. ELF has healthy margins, as you can see, 71% margins. So they're going to cut a little bit off. And really, like if you move the price of their cheapest product, their flagship product, which is like $3, if you move it to like $3.95, will the consumer notice? So, I mean, to me, this is a business that works even with 125% tariff. This is a business that works even in this case, because they get those products from China so cheaply. And don't forget, another catalyst is it's over. Temu and Shein are over in the United States. The de minimis charge, right, of these packages that were shipped from China to the US, that de minimis charge is gone, which means that now all packages get charged a minimum tariff of $75. Think about it. It's a non-starter. $75 is the minimum tariff that you're charged just for shipping a package from China to the US. So there's going to be a lot of makeup sales who were done straight from China to the US. These are going to be gone. So they're losing competition too from China. I think this business is very bullish. I'm very bullish on this business. And the CEO, he mentioned that on the call. As soon as they knew that Trump got elected, Trump always said what he was going to do. So what do you think they did? They've shipped so much stuff to the US. So much of their makeup is already shipped to the US that Elf said that this will be a 2026 issue. This will be a 2026 issue in the margins. That's how much stuff they shipped from China to the US. And so will they have a trade deal by 2026? Maybe, maybe not. I don't think you need a trade deal for this stock to be viable. And the CEO is working really hard on moving the supply chain out of China. And I'm confident on this one. And it's down 75% since June of 27. I mean, what's the madness? It's down 75% in 9 months or 8 months. This makes absolutely no sense to me. Yes, the enterprise value over gross profit over revenue growth is actually very cheap. Like it's, for example, SoFi is cheap. That's cheaper than SoFi right there. So it's actually very, very cheap, but relatively to like HIMS or BioStem, it's not that cheap, right? But this is not a speculative business. Like this is a business with a proven business model, with proven customers, with customers who keep coming back. This is a high growth business in the category. So I cannot understand this drop personally, and this is a stock that I look to add to as well. So anyways, none of this was investment advice, no financial advice. No placenta advice, no makeup advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.